Finding the stocks that make really big gains in a short period of time is actually pretty simple. You need to understand three essential things. And in this video, I'm going to tell you exactly what those are, and I'll show you how they've applied to not only short-term day trades, but longer-term position trades. All right, so what is the concept that is so important for finding hot stocks? Very simply, almost all strong stocks start their market-beating trends with abnormal activity. What I mean by abnormal activity is an abnormal price gain with abnormal volume. This makes a lot of sense because the reason stocks make big gains is because they have some fundamental catalyst that attracts buyers. And so if a company puts out news or there's a rumor in the market that captures the buyer interest, you will have those buyers rush into that stock and trade it aggressively, buying on large amounts of volume and causing the stock to go up a lot. And so you don't really have to read news or understand what the news means, because you can just trust that the people who do that work, who know what all that news means, will buy or sell if the news is good. And so all that I do every day, and I've been doing this for over 30 years, is look for stocks that are trading abnormally. But it's not enough to do that, because while almost all stocks that start their market-beating trend start with abnormal trading activity, not all abnormal activity leads to big gains. And therefore, we need a method to filter out the abnormal activity that really matters and focus in on the best opportunities. And that comes down to two things: reading chart patterns and understanding the reward for risk trade-off. So when I see a stock making an abnormal price move using the indicators that I've developed, and I'll show you these in just a moment, I will look and determine whether that stock is breaking from low price volatility, and I'll explain this visually in a moment, and then I assess the reward for risk trade-off. So let's start with the day trade from last week, and then I'll move into some longer term trades as well. So we'll jump back onto the screen here, and this is a chart of LASE, a stock that I bought on 18th of September. And the reason I took an interest in it, first and foremost, is the abnormal volume that started trading. Now this was pre-market. Now you can see here these little yellow and pink dots. That's one of the indicators that I've created that looks for abnormal price and abnormal volume. So I've got a little algorithm that goes through every stock in real time throughout the day looking for stocks that do this. And you can learn more about this indicator at my website, stockscores.com. I'll show you that website in just a minute. All right, so we've got these action candles, that's what I call them, triggering early in the morning. And there's a few other times when that happens. Now, if we just start again here, this first one is good because it's breaking from low volatility. What I mean by low volatility is quiet sideways trading. This second one is it's too late now because the risk-reward relationship no longer makes sense. Now, what do I mean by risk-reward relationship? Well, if I'm buying here, I'm going to put my support at this little green plus sign. That's where my algorithm defines support. And so that is my risk. And anything that the stock goes up above that is the reward. So you can see at its highest point, the stock had gone up 1, 2, 3, 4, 5, almost 6 times its risk amount. If you buy one candle later, there, you still have the same support price, but now your risk-reward ratio is 1, 2, 3. Still good, but we only can say that in hindsight because the stock ended up making a really strong gain. All right, now let's take it another step further. If I instead wait for the pullback and buy the break of the pullback, now my entry point is here and I'm closer to my support price there. And so now my risk is smaller, but I still have the same upside. And again, we don't know where the upside will be, but at the end of the day, that was the upside, and it was 1, 2, 3, 4, 5, 6, probably 7 times risk, just charting out quickly. So it's not enough to just look for abnormal activity. You want to look for abnormal activity that is breaking from low price volatility. Now there's more to it than that. I'm just giving you the broad strokes, but these are things that you can start to do immediately next week in your own trading to start to do better. All right, so I said we would look at some longer term trades as well. And so what I'm going to do now is jump into my website, stockscores.com. And on Stockscores, we have this free weekly newsletter here. And I encourage everyone to sign up for that. It's free. I send out an email every Monday. And in that email, I pick stocks. And so we're going to go through some of these as examples of what to look for. So let's start with GoPro, GPRO. That's a name everyone's heard of. And on July 22nd, I put GoPro on the feature list. All right, so now we'll jump into the chart of GoPro. Oops. GPRO. And July 22nd was right back in here somewhere. And you can see that it had low price volatility. It made an abnormal break with abnormal volume. That was at $1, just under $1.40. And it went up. It's currently at $2.60. So, I don't know, what is that, 80, 90% gain? Now at that point, the risk-reward ratio was a little bit wide because your entry is here and your support is there. So 1, 2, it's roughly up 2 times risk right now. But what if you waited for the break of the pullback? So here's the pullback. There's the break of the pullback. Now my entry's at the same price, but my support is closer. We call this an inflection point where price stopped going down, started going up. Now my risk reward ratio is 1, 2, 3, 4, 5. It hit 6 times on Friday morning. Let's look at another one. Let's jump back to the list here and I know Open did really well, so let's take a look at that. OPEN. You can see it is boring, sideways trading, and it comes alive with abnormal activity. It went up, it pulled back, it broke its pullback at 250 with support down here. It never closed below that support, and since that time it's gone from $2.50 to $10. That's a 400% gain. Now I don't know anything about Open, what they do. I really couldn't care less. What I do as a trader is I follow the abnormal activity as an indication that the company's story is good, that the fundamentals are improving, even if it's only the perception that the fundamentals are improving. And that's often the case, is stocks will sometimes move just because the crowd thinks it's great. And then they often go right back down again. But I don't care because I'll be in and out through that process. So the key to summarize what I've been talking about here is if you want to beat the market, if you want to find the hot stocks, start by looking for abnormal activity and then assess chart patterns to determine whether the reward for risk relationship makes good sense. We do not want to buy abnormal activity if it comes after a period of high volatility. It's best when it's breaking from low volatility, or if you're too late, wait for the pullback and the break of the pullback. These are all concepts that I teach in the different courses at Stockscores.com. You can learn more about that at the website. But if nothing else, just sign up for that free weekly email because it'll put you on the list where I'm sending you lessons every month, or every week, sorry, and also picking some stocks, which generally they've done quite well. Hope you've enjoyed this video. If so, please give me your thoughts. Leave a comment in the comment section about how you find the hot stocks. Maybe you're doing something very similar to this. What sort of tools do you use? I use Stockscores and TradeStation to find these, using indicators I've created for that. And most importantly, as always, trade well.